Thank you so much, Omar, for jumping on the Dwelling Show. I really, really appreciate your time. I cannot wait to get into the show today. I appreciate your time.
Hey, thank you. Well, that's a great honor to be here.
So let's just jump right in. Why did you get into real estate? What was the, kind of like the driver of making you to start thinking of investing or even thinking about real estate in general?
Well, first of all, why not, right? Why not get into real estate? The other deal is that my family is always invested in commercial real estate. So we've actually seen the benefits of holding commercial real estate along with other investments, stock, bonds, all of that kind of stuff. So this was just a natural progression. When I moved to the US from Canada 3 years ago, we started looking into this because we wanted to invest some of our own money, and one thing led to another, and here I am. Now I run syndications and do a lot of finance stuff for these guys.
Awesome. So I actually read one of your blogs, fantastic blog, well written. Yeah. And so you definitely have that perspective. You also lived in the UAE, you moved from Canada to the United States. So can you tell us some of the differences between those markets? You can include the UAE market if you want to, from a real estate perspective, and kind of what are your thoughts about those markets?
Well, look, first of all, nothing's like the US, and I can only say this after moving here. People I feel are a lot more entrepreneurial and they just want to go, 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 which is great. I love that about the US. And ever since we moved here, I tell my wife, wow, we should have moved here earlier. It's very infectious, right? Everybody wants to do a deal. People are super chilled, relaxed. They just want to go. So it's very entrepreneurial that way, which is both good and bad. Look, it's good in the sense that you can do a lot of deals. You can come in if you work hard, lots of stuff happens. But I guess the only bad part would be that, things, when things go up, they can go down as well, right? So it's a little more cyclical than a lot of these other markets, you would say. But on the whole, I think it's a way more dynamic market. And one of the biggest deals, apart from the entrepreneurial spirit of the people, is that the economy is so big, right? In other countries, people talk about the real estate market like as one unified mass. But in the US, there is no one real estate market. California is so different than Texas, than Maryland, than Washington. Every place has its own set of drivers because each place in and of itself, standalone, just off itself, could be a top 20 economy pretty much in the world.
Fascinating. Yeah, we were talking just before we jumped on the show about California or even Ohio and how they're bigger than some of, really big countries that you would assume yeah. So that's really, really fascinating. So I definitely want to dive in as well on the writing, right? So you work, in a big commercial company, and I think you've done about 3.7 billion in capital financing and M&A, merger and acquisition, work. So you have this really good, solid underwriting, but also just finance kind of know-how, right? I'm just kind of curious, how has that helped you with your own investment, and how has that really helped you build your own business?
Well, that's a good question. So how it's helped me is, first of all, I had to spend the first 10 years of my professional life working close to 100 hours a week. So when you're doing that, you don't think it's any help. You just want to just get done with the job and move on. But I think how it's helped me is that it's exposed me at a lot of different areas at a very high level. So just starting off, I worked out of school. I worked with RBC. It's one of the biggest global broker dealers on the planet. I did a lot of work there in asset management. I moved to oil and gas, did a lot of M&A stuff there. And now I advise on healthcare M&A. And we have our own private equity firm that does all of this other real estate stuff. And we've done about $80 million worth of deals. And how it's helped me is that it's allowed me, to develop my network in a lot of different places. So I can rely on people and I can just pick up the phone and call a lot of people for different kinds of perspectives. But the other deal also is by being exposed at such a high level with such quality players, that my level of analysis has just gone through the roof. Now, even when I look at a set of numbers, within 3 or 5 seconds, I immediately know, big picture-wise at least, what's going on. Where are people trying to hide and where are people not trying to hide? Where are the number? What story is the number trying to present me? And that you only get with experience. And I used to think also, well, how did my boss do it when I entered? Because my boss would look at something and he would just kind of feel it out. It just doesn't feel right. I was like, dude, what are you talking about? How did you figure that out? So I think it's a combination of experience, being exposed to very high quality players, and then just doing it. It's consistency, it's repetition, it's day in and day out of just sheer hard work and practice.
So if I'm a dual listener listening into our conversation, I'm a fly on the wall and I'm like, oh my goodness, this Omar guy really sounds like either really smart, clever, sophisticated, It just seems really like big numbers, I'm just a little guy, but I want to start in multifamily. I want to start buying apartments. And that this person has that kind of mindset of I'm just a little guy. What do you say to that?
Well, first of all, look, everybody's got to start somewhere. I started somewhere. I can tell you this, that when I graduated, if it's of any condolence to anybody, when I graduated in 2008, the market had gone down. I was a finance major, and I had two jobs taken away, not taken away. I mean, the companies were not really hiring anybody. And I can tell you, when I graduated in Toronto in 2008, that 6-week period, no jobs were advertised, including line cook jobs, because practically the world was about to end. So if it helps anybody, I can tell you that you couldn't have started at a worse time than I did. Nobody could have started at a worse time than that end. And look, it's a matter of being consistent. It's a matter of just putting one step after the other, and having a plan and hopefully going forward. And of course, there's setbacks. A lot of days you feel frustrated, but you got to do it, right? If you like something, if you're passionate about it, if you just want to go do it, and that's what it is.
All right, so I think that's a really, really good answer, and I think it's a good segue for what I'm about to bring up. So coaching, right? There's been a lot of talk on coaching. People talk about paid mentorship, non-paid. I mean, why do you think coaching is essential, or is it essential? So for this little guy that is thinking, well, I want to get into, multifamily, I want to get into just real estate investing in general, but I just don't know how to start. I don't know where to go to find information, or I need somebody to coach me. What are your thoughts on just coaching in general, paid and non-paid?
Well, look, I'm not opposed to education because my parents spent a fortune educating me. So I'm not at all opposed to education. But what I am opposed to a lot of times is these days when I feel like a lot of coaches couldn't get a real job and couldn't become real investors, so they decided to become coaches. Those coaches I'm very opposed to. And my biggest thing is, look, you've got to decide what you want to do. So for instance, you might want to learn multifamily investing. If you just want to learn the basics of multifamily investing, you don't need to go pay somebody 20, 30, 40 grand. Okay, that's just stupid. Straight up stupid. Don't do it. You're wasting your money and you're giving it to a guy who's not even going to teach you anything. This guy couldn't even find a real job, right? That's why 99% of these guys can't even find a real job, literally, right? But for instance, if you want to learn something specific, like how to set up your business, how to set up your marketing funnel, how to connect with more people, depending on your area, what certain building blocks do you want to add on to your business? How do you want to network? How should you present yourself? What kind of people should you talk to? How should you talk to these people? Those are very specific areas where you should get coaching because they will dramatically hasten your progress. And look, the biggest example is, LeBron James, greatest player ever, pretty much. I mean, he has a coach, right? But what he doesn't have a coach is for every single thing on the planet. He has coaches for very specific things. Why? Because LeBron's a superstar. LeBron's a really smart guy who understands that if he has to go somewhere, he needs to have the right people around him.
Okay, this is very, very fascinating. I really like that. LeBron James, that's an example everybody knows, right? So one of the issues I face as a multifamily syndicator is when I'm underwriting my deals, I try to be conservative. That's the buzzword we all use. And, and I'm trying to make sure that we're keeping our investor capital, we're capital preservation. We're making sure that the deals we're looking at are actually going to spit out the returns and IRRs that we're looking at, right? So what are, based on your experience, what are some of the pitfalls, or shall I say pain points that you've seen, when you started kind of underwriting deals, right? And what did you do about it?
Okay, that's a good question. It's a pretty broad-based question, so I'll just give you some of my backstory before we move on to the pain points and all of that. So what had happened is when I moved and when I was actively now investing in private syndications and all of that kind of stuff, I knew that, look, I'm really good at finance. I've got great experience. That's one component of, multiple components and make up a real estate deal. So you need to have good property managers. You need to have good broker relations. You need to have good lending relationships. Then you need good managers. So I know one part, and there's many parts I don't know or can improve on. So how about I focus on the one part that I'm really good at, that I can provide a lot of value in, and go from there. And what happened very immediately when I moved here, and I think Dallas is like ground zero for this kind of stuff because everybody's drank the Kool-Aid in Dallas. I started seeing that there were a lot of these coaching and mentoring programs where essentially what was being told to people was, look, you take my weekend course and I guess now you're a tax strategist, now you're an underwriter, now you're a property manager, now you're a broker. Everything for, I don't know, $10,000, you can be everything every day in no time. And what was happening as a result is that a lot of people were straight up. I mean, if you look at their underwriting, you're like, dude, you can't even add two numbers together. What happened? Right? But why? Because look, this is my mentor's model. And a lot of times you have to take people aside and say, look, dude, first of all, I'm not judging anybody, but look, there's a reason your mentor uses one model for himself and he gives you another set of models. Number one, okay? And these are two very different things. Number two, if your mentor, for the lack of a better term, was selling used cars till 2 weeks ago, right? And hadn't even heard of the word finance, what makes you think in 2 weeks, he's now doing the job of somebody who gets paid $150,000 to $300,000 and works in an investment bank? Do you think the guy working in an investment bank is stupid? Like he would just have to take a weekend course and bam, just starts making a lot of money? Things don't work like that. So, a lot of times it's a case of just take a step back, think about things in totality. And look, this, by the way, also comes with that whole education and mentoring thing, right? If you have the right mentors, and if you've chosen them for the right purpose, you see their track record, you see what they're doing, that can help you avoid a lot of problems. They won't just say, you don't want to get a mentor when you're in a problem. You want to get a mentor before you're in a problem so you never get into a problem to begin with, right? It's that sort of thing. And what are some of the big pain points? Just from an underwriting perspective, I see, first of all, there's a lack of sophistication. Look, I can't go do an engineer's job. Why I can't do it? It's a very specialized job. And you need to be trained to do an engineer's job. So the same way an engineer or an IT manager can't just suddenly get up and start doing my job over a weekend. It's got nothing to do with their level of intelligence, but that's just the way things are, right? So lack of sophistication. What I also see is a lack of foresight and planning. So people only have a plan A and they don't have a plan B, C, and D. And Mike Tyson has a great saying, right? His saying is everybody's got a plan until they get punched in the face, right? So my point is, if you only have a plan A, and we both know, Ola, that eventually over a 3 or 5 year period, some things are going to go south. Things maybe won't work out. Mm-hmm. Well, how do you respond to that? Because if suddenly things take you by surprise, a lot of times what happens is that a lot of sponsors, especially newbies, they are under so much stress that they just check out. They're just paralyzed. They can't even do anything. So even before you look at the underwriting, I think a lot of qualitative assessment of the team, the track record, what their communication is like, what kind of personality do they have. I think and that's more important beginning out than the technical aspects of the deal.
Wow. Thank you so much for that. That's really packed. So if I'm listening to this and I'm a dual listener and I'm like, okay, so maybe I'm not sure I want to just actually go all into multifamily and buying 100 unit or 150 unit apartment building, but I want to align myself with a sponsor like yourself or myself or a syndicator that actually does this. Mm-hmm. What would you say are really great quality of a real estate investor or a syndicator that somebody looking to invest 50 or 100,000 can look out for?
Okay, that's a good question. And this is a question that's been asked by not only some of my coaching clients, like my students and stuff, but also people, just my investors, right? Because a lot of investors, when they're referrals, they start with why you? Like, tell me about yourself. And I think that's a very important question to ask. So we cover that extensively on our blog and from multiple angles, not just say, hey, how to get a sponsor, but how to get a deal, how to look at a deal, how to pick the right market, all of those kind of stuff. So if you go to our blog, shameless plug here, sorry. If you
do it.
If you go to our blog, you can see it right from the start, because the way we structured that blog and all of that education free, and by the way, it's all free, is that we start with why multifamily, and then we build on that foundation story. So if you start from the start and you go forward, it's like you're going through a journey, right? So then you can start picking up all of these things. But big picture wise, I think what people should be doing is, look, it's like any other relationship, right? Any other relationships that you have in your life, I have in my life, or anybody have, things take time. Don't be in a hurry. If you got 50 or 100 grand, don't see YouTube videos and just pump yourself up that I'm going to invest with the first guy I see. Don't do that, guys. In fact, I counsel a lot of my investors. Look, it hurts me in the short term, but I think it develops our credibility in the long term, because it's an honest answer. Is, look, if you have the money, chill out, relax for 2 months, educate yourself, talk to people. And after 2 months, if you feel it's reasonable, you've developed a good relationship with somebody, then take the next step, and then take the step after that. Don't be in a hurry. Let the relationship grow organically. Because, there's a saying, the deal of the century comes every 2 weeks.
I love that. That's a good one. I've heard the a deal is like a boss. There's always one coming behind.
That's a good one as well, actually.
Okay, fantastic. So you had all these kind of pain points, and then you figured out kind of the pitfalls, like of
Yeah.
a standard underwriting
Mhm.
deal, right? So, and then you started thinking of building a solution and a software called Deal Analytica.
Yeah.
I've seen, previews of it. Thank you so much for sharing those with me.
Very well.
I feel really, special to see those because it looks amazing. So do you want to tell our dual listeners a little bit about how you put that together and kind of like just, tell us the story behind it?
Okay, so first of all, thank you for that plug. Really appreciate that. So what had happened is that, look, we were seeing all of these problems when just our friends were investing. And like I said, we run our own deals. So we developed our own models, right? And because, look, I do this for a living. This is what I get paid a lot of money to do anyways. So that's why when I transitioned into this business, I just took all the skills I'd learned at the investment bank and the M&A shops and just bought it. And we built our own models up. But coincidentally, what was also happening is, that when you're in an industry, you meet other people and you just talk shop, right? Hey, what are you doing? What are you doing? And consistently amongst our friends, one of the big problems that they were having was everybody kept telling us, look, dude, I just don't. I mean, even experienced guys would be like, look, I know how to underwrite, but I'm not very solid or very comfortable with this underwriting because I feel like there's lots of areas where I'm just flying in blind. And what happens usually with the regular software out there, it's very generic. How to value a multifamily or how to value an apartment building. Okay, that's great. But I don't really care about that. How to value a multifamily building in the context of the syndication model, which is a very specific type of model. And nobody caters to that. Why does nobody cater to that? Because look, if you're a big software company, you want to build a software out that is going to be applicable to, I don't know, 20 million people, right? You don't want to build a software that's applicable to 2 million people, right? Because your market's very small. But in our business, this is what we do for a living. So when we were building this out for ourselves, we were building this out for our team. Because anyways, as I'm hiring more analysts, I wanted to go on a software system because then we can compare results across different assets that we've underwritten and how they're performing on that. So one conversation led to another. We had so many of these conversations over like a year period that even our own friends within the industry would keep coming back with, hey, can you help me with this problem? Can you help me with that problem? So that, it was an organic journey that started at a problem and a pain point that everybody was seeing. And it just slowly developed more. And now we're building this out with the point being that we want to tell people, look, like me, you don't have to waste, I shouldn't say waste, you don't have to spend 15 years of your life trying to learn the ins and outs, right? I'm going to build you a software. You're going to use it, and it's going to give you institutional quality underwriting. So then you can take this to your bank. You can take this to your lenders. You can take this to your equity partners and your GPs and KPs and, I don't know, your family members, whoever you want to take this to. And they know that you have the Rolls Royce, basically, of underwriting. And nobody can poke holes in it. So you develop your credibility much faster. You get to leverage our experience, and you get to go where you're going quicker, faster, and happier.
Love it. Love it. So before I go to the quick rounds, right? I just wanted to ask another question. So if I do get some listenership in Canada, by the way.
Oh, that's nice.
Yeah, I do. So obviously in the UK too, where I'm from. So if I'm in Canada right now, I'm like, oh my God, I like Omar, even though I'm in Canada right now, I feel like I can't really do much in the United States, but I want to connect with you. Or can I even invest in the US, but I live in Canada? What do you say to that listener?
Well, I have Canadian investors. So what I can tell you is that yes, as a Canadian and as an international investor, you can invest in the US. There's a couple of hoops you have to jump through. And we specialize, by the way, in Canadian and international investors just because of our backgrounds. So yes, you can. So when you get in touch with us, or similar people to us in our area, but specifically with us, what we do is we connect you with the right folks. So we connect you with the right CPA. We connect you with the right lawyer. So everything is a very smooth process. You don't have to go looking for people, and you don't have to go find people who give you the references to this guy. We can connect you with the right bank accounts, with the right CPAs, with the right lawyers. And the average American syndicator can't do that because, first of all, frankly, they don't have to. Number one, I mean, America's a big country, right? And thirdly, why bother, right? I mean, that's their perspective. Hey, why should I be even bothered? There's 320 million people in my backyard.
Makes sense. Makes sense. Makes sense. So we're definitely dwelling into the quick round. So these are going to be quick questions, quick answers. You ready?
Let's get into it.
All right. First question. What is that differentiating factor that kind of separates Omar Khan from the next guy or the next girl? What's that one factor that makes you unique?
I actually have institutional financial experience, as opposed to, I didn't take a weekend class. I worked in the investment banks, I worked M&A, and I worked 100 hours a week for 10 years straight to get to where I am. So I didn't take a weekend course. And when a lot of our investors, they don't get like, hey, here's a $25,000, $50,000 deal. Yeah, go for it. We give you very specific, actionable advice, which is not just the deal, but how to maximize your after-tax returns, how to get into a deal the best way. So we can structure a deal for your particular needs, and other people can't do.
Fantastic. I love it. Second question. What was the last book that you read? And what was the one thing that you kind of picked as a nugget that you really liked from that book?
So I keep on and off. I read the book Thinking Fast and Slow. Thinking Fast and Slow. Yeah. I forget the title. What happened is that I did my CFA charter, so the bulk of my charter on the third level at least was all about behavioral economics, right? And it's a very interesting field. And Amos Tversky and Daniel Kahneman, they're the two, I think they're Israeli behavioral economists. They're the guys who invented the field pretty much. So, typical economics, it talks about what people should be doing, or rather what a rational person would be doing. And this talks about what people are actually doing. How do they actually respond? So it's very interesting. It's a very simple concept, but they're so powerful that you have to keep rereading them just to keep them fresh in your mind.
Fascinating. I think Jay Shetty mentioned that book. I think I have it on my Amazon list. Yeah.
You should read it. It's great. I cannot recommend it highly enough.
Huh. Cool. Okay. Last question. So you've got obviously Boardwalk and Wealth, which is your company. You analyzing a ton of deals. You've got Deal Analytical coming out soon. You've got your baby. You've got your wife. You've got a lot of stuff going on in your life. What do you do for fun?
Dude, I read for fun, okay? I read for fun, I listen to a lot of music, and ever since I moved to Texas, I eat a lot of Texas barbecue.
Are they really as good as they say it is? I don't think
Let me tell you this, my friend. It is worth the hype, okay? It's not hype, it's reality. It is that damn good.
Wow, awesome. That's good to know. That is good to know. So before obviously we go, I just wanna, if I'm a listener and I'm thinking, I really like Omar, I want to connect with him. He's a straight talker. I want to know more about him. How can people find you? How can people connect and plug him to you?
So our website is boardwalkwealth.com. So that's BOARD walkwealth, one word.com. You can also email me at Omar, OMAR, at boardwalkwealth.com. Or when you go to our website, just enter your first name and email address, and we can add you to our distribution list and start educating you, sending you cool little stuff we see. They're all very short, punchy emails, and they're always fun.
Thank you so much, Omar. I mean, this has been a great conversation. I've learned a ton myself. Obviously, we're going to be working together going forward anyway, as we've always done. So I really appreciate your time today.
No, thank you, Ola. It's a great honor being on your show. Finally, thank you very much.
Thank you, sir.